In this lesson, we're going to talk about the Inventory Valuation Summary Report, which I found under Reports, Inventory, very first one. And this is what you get. And you want to pick the right date. We're going to look at the report for the sample file as of the end of January. You can print this out. You can go around, do a physical count to see what the count really is. QuickBooks edition, most editions except for the Platinum edition, only offer the average cost option, which generally most customers are happy with, this costing method. But what you do is you count, and let's say you go around and everything matches up but cabinet pulls, and you have 423 on here, but you only counted 399 on hand, which might be a common problem because the cost is real low and you just write it off. So I want to show you how you can write that off. Also want to show you this button here that says hide zero quantity on hand. If you click that open, it's going to show you a bunch of extra lines. It just makes the report look better when you click that. All right, so from here you want to go to your inventory menu and you go to adjust quantity value on hand. There's usually not a reason to adjust the value on hand unless you know there was some tremendous mistake. It's better to dissect it. But if it's been set up and working properly, all you want to do at this point is just fix the quantity. So for the cabinets, we're going to make that same date, 01/31/2025. And I'm going to create an account, write-off, or inventory shrinkage. Don't use the inventory asset account. You want a different account for this. It can be part of your cost of goods sold. It's up to you and your tax preparer, or it could be an other expense. I prefer it down there. And so down here, we're going to do the cabinets. You can search and find them. It was not cabinets. That was just the category. It's the cabinet pulls. And remember, the number was $4.99. My new quantity is $3.99. So it automatically does the difference for me, and down here it's adjusting. So it took 24 times that individual average cost, and it's going to adjust by that. So this is okay, that date is perfect. I'm going to hit save and close. And now you see that it's now accurate. It's matching my manual record of double checking that that's what I have on hand. Everything else matches, and I'm good to go. And I want to show you too what the profit and loss looks like. So here's where we previously sold an item, and then this is our inventory shrink, and this is our net income for the month of January with our two transactions. But this is the 6142. You can always click this to get back to the original entry just to see what it is. It's calculated for you and you're good to go. So that's the most commonly used report for inventory valuation summary. And what you need to focus on is this column here, the on-hand quantity, the average cost, make sure that looks right, and your asset value. The rest of these columns really don't matter. It doesn't really matter what you can sell it for, but you need to, the 30,621.96, that is what's going to tie back to your balance sheet. And that's the number that's most important, is to make sure that those numbers, 30,621.96, ties back to your balance sheet. And remember the date. We used the month of January. So 30,621.96, that's the same amount. And that's how you look at your inventory valuation summary and fix it and correct the quantity on hand.